Hey everyone, Vincent Nguyen here for Tipline. Hope everyone's doing well. I believe I have a very interesting video today to walk you through the FLJ. I'll have all this information in the description along with um, the exact ratios and whatnot that I'm going to be talking about. So I'm just going to keep the video clean in terms of not giving you too many um, Fibonacci ratios and whatnot because there's just too many to go through, even for me as I'm walking through this video. So I'm going to keep it more of an overview, walk you through the concept, how the harmonic patterns work with Elliott wave and how they work with the Fibonacci sequences at a higher level. Okay, so with that, let's jump in to FLJ. So one of our trader came into the room and said, "Hey guys, FLJ is running on positive PR that the company is buying a company called Alpha Mine." I said, "Cool, all right, let's jump in." And this was in the aftermarket, and I just when you jump into a trade, your mind goes squirrely and you don't think straight. And I looked at this and go, "Oh, hey, this is a bullish shark pattern, right? Bullish shark pattern." I looked at price target 1, and then I looked at price target 2 and thought, "Oh, this is awesome. Okay, we've got a good trade here." The patterns, they've been validated. You've got an ABCD pattern, which created leg O up to X. And interestingly enough, for the ABCD pattern, the C up to D pattern, which complete at the same, right? And then there's the harmonic optimized potential reversal, which it followed classic textbook pattern that I know I can trust. So the pattern completed back here for the type 2 reversal, which is the 42.12. All right, I hope you're following me so far. Okay, and I saw that, hey, here's the indicator right here, price completed, and the harmonic pattern also completed. Everything it checks out, and I'm like, cool. All right, so is there a potential for me to gain? Let's say I came in about 28, 27. Yeah, my average was about 27 at the time. I'm like, hey, look, I have the potential to gain 50% on this play. What I failed to do was trade management. I failed to put trade management in place in the event that this would happen the next day, and it did. So at that point, I'm thinking, something's not right. Price declined quite rapidly. And so I thought, what did I miss? What did I miss in this trade? Turns out what I missed was the shark pattern, which this pattern is a shark pattern and it is a bullish pattern. I missed that the shark pattern is a precursor to a 5-0 pattern. So a 5-0 pattern is just exactly how it sounds. It's got 5 points and it ends somewhere up here. But before we even get to that, let's go back and talk about the shark pattern before we jump into how the shark pattern leads into a 5-0 pattern. And before I even do that, let's just zoom out and set the baseline that when you're trading a stock, location is king. Right? It's just like real estate. Location is king. In this case, the shark pattern is one of 4 or 5 reversal patterns that are basically identified by a lot of traders as reversal patterns, whether it's at the top or the bottom. In this case, FLJ is at the very bottom of the stock pricing right now. Okay, so I looked at this and go, oh, okay. I knew in my head that the shark pattern is one of the reversal pattern. But what I forgot was, like I said earlier, it's the precursor to a 5-0 pattern. And that's where the pain came in, for me at least. Okay, so like I said, textbook case. Here was the textbook case ABCD pattern, okay, which, fine. The O leg, like I said here, the O to X leg for the shark was confirmed by the ABCD pattern. Okay, so that's done. Let me get rid of some of these here. Let me move some of these out so that way we can walk back through here. Okay, all right. Oh, let me get rid of this guy. Okay, so this is where things get really interesting, because this is why I love TA. Is when all the studies come together for technical analysis, where you see, I'll point out the Elliott waves here for you. Elliott wave 1 to 2, corrective wave, 2 to 3, motive wave, 3 to 4, corrective, 4 to 5, motive, and then retracement down to, hold on a second. I'm sorry, you know what? Hang on a second, I misspoke. Hang on a second, why can't I delete this? Hey, go away. Why can I? You know what? Hold on a second. Why can't I delete? Huh, okay, that's weird. Okay, there it is. All right, I'm sorry. So the motive waves are the waves from 1 to 5, and then the corrective waves are 5 to C. But within each of these waves, there are corrective and motive waves that builds the sub waves up to the next leg. Okay, I hope I didn't confuse you. If I did, I apologize. I'll have more information on Elliott wave theory in the description later. So getting back to this, if you notice here how, I'm going to delete some of these so that they're not confusing you. You notice how the Elliott waves coincide with the peaks of the shark wave. Okay, for instance, wave 3 ended where wave D for the ABC pattern. Wave 3 also ended where the O to X for the shark pattern up here. Following me so far? So that, to me, when I saw that, was like, everything checks out. This tracks with the fact that this particular stock is being managed by an algorithm. When a stock is managed by an algorithm, that tells me that I can almost precisely project price based on the Fibonacci sequence and the rules that apply to each of these patterns. And you'll see how that develops here some more. So then after wave 2 to 3, the bull leg, you have wave 3 to A. Interestingly enough, X to A tracks for the shark pattern, because the next leg or wave for the shark pattern is X to A. And then look at where 4 to 5 concludes up here. A to B, right? Following me so far? Okay. So then B to C is just the, oh my God, roller coaster, I'm gonna die, I'm losing all my money wave. And that concludes down here. Let me enlarge this so you can see it, wave C. Okay. So within these movements, there are Fibonacci sequence that are very specific, like the 1618, 113, which you'll see the importance of that later. And then up here you've got another 1618 up here. These are all very specific ratios that must be met in order for this pattern to be a valid harmonic shark pattern. I'm deleting these while we're talking here because they're annoying me. Okay, so then it tracks, right? So 5 down to C is the corrective wave for the Elliott wave theory. And that happens to also be the conclusion of the termination point of the harmonic shark pattern. And then it consolidated here for about 34 days. And so when I looked at this range, I thought, that's cool. Can it move towards price target 2? And like I said earlier, this is where I failed to recall that the shark pattern, even though it's a bullish pattern, is a precursor to the 5-0. And I'll walk you through the 5-0 pattern now. But before I do that, I need to draw a Fibonacci sequence of, let me see here, the overall leg between the lowest point of the shark pattern up to the highest point, and then retrace this down for you. Okay? If you look here, is that right? Hold on a second. Let me extend this out. Is that right? Okay. All right. If you look at where price target 1 for the harmonic pattern is, right here, price target 1 at 29 cents, and then if you look at where price ended on this day, where the price spiked up, that is the 50% mark of this entire run. I'll show you here, right here. So that is the 50% mark, this green line here, and that is the natural reaction of the 5-0 pattern. So where C ended, right here, you're expected to hit the 50% retracement of this entire shark pattern. That is where I failed as a TA. That is where I failed as a TA, because I failed to recognize this 5-0 pattern. So I bought in, and then I bought in some more by averaging in right within this range between, I believe it was, let me get rid of some of this here. Hang on a second. I feel like I spend more time managing TradingView than anything else. So I bought in an average in right around 15 cents, 15 to 19 cents, thinking, you know what? The 50 EMA should catch it. It should catch it, and it'll bounce. And it's going to head back up to price target 2. Had I properly identified the 5-0 following the shark pattern, I would have waited to buy in down here where price has been consolidating at the OB leg, or remember earlier when I said the 1-1-3 ratio? This ratio right here, the 1-1-3, this is extremely critical, because if the 1-1-3 is breached or invalidated, it could potentially invalidate and jeopardize the entire 5-0 movement right here. It could jeopardize this entire 5-0 movement, which now that I'm looking back today, it could possibly happen because price is now sitting at 11 cents and change, and the 1-1-3 is at 12.0. Okay, so this is why I stress to all of our traders that you need to be extremely precise in your price targets, whether it's an entry and exit. And for me, in full disclosure, this was a big mistake in terms of not fully understanding how the shark pattern leads into the 5-0 pattern. Right? Had I remembered that the 5-0 pattern follows the shark pattern, I would have measured out the 50% of, hang on a second guys, I would have measured out the 50% of this and saw that price target has already reached for the 5-0 pattern. And unfortunately, that was where my mistake was. And so now we're down here where potential traders are looking to make an entry. Okay, so if you made an entry at 12.12, your stop loss would probably be where it is right now at about 11 cents. But I trade with a mental stop loss. So what happens now? Well, what happens now is, it's unfortunate that if you're stuck in this trade, you have to manage it and watch closely and see what happens in the next day or two. We know that there's earnings coming out today, which is not out yet. We also know that volume has died down quite a bit. And then we also know that there was a big sell-off during this time. Let me close this up, guys. Hold on a second. Okay. We also know that there was a big sell-off of 48 million shares on the 24th, the morning of the 24th, leading into another 10 million shares sold. And then it just consolidated from there. I know that there's a price target 2 coming, which is, where's my brush? Right here. This price target 2 should be here at 42 cents. So that being said, how do I, let's say now that I've identified the 5-0, what is next? You're probably wondering. What is next is, should a breakout occur, the next price target that I would shoot for is a Fibonacci retrace or an Elliott wave, motive wave upwards. Okay, so how would we determine that? Hold on a second. I would take this and I would project this up. Oh, hold on a second, I did that wrong. Hold on. So usually you're looking at either a a 618, a 618 retracement, which puts it right at around 24 cents, or a 10, which is at 32 cents, or a 1618, which is around 45 cents. Okay. Now, interestingly enough, where is price target 2 for the shark pattern? Right at 42 cents. Okay? You see that? How TA work together in terms of the patterns, the different studies. So what happens now? Right now, there's not a whole lot that we can do other than to continue to track the price movement today, leading into tonight, after market. And then if price moves in the direction that we're expecting it to do, then we can gauge for the price targets that I just outlined. I'm thinking that it's going to be somewhere in the 42 to 45 price target range, because we have double confirmation. But first things first, this little hang on a second, guys. This trading range needs to have a breakout before that can happen. But my biggest concern now is, so basically there's a strong support down in this area, because it consolidated for a while here. At one point on the 28th, price did dip into that zone, which I'm not comfortable with. We don't want to be in that zone. We want to stick around the 1.13 retracement leg for the shark, and then spring off of the 1212 mark. Right there. Okay? That's where we want to get off on. And then from there, once the breakout occurs, then you can trace back your hold on a second. Okay. Projection. And then from there, you can start planning out your exit. If you've been in this lot too long and you just want to get out, you can count on perhaps getting out at the 0.5, which is 21 cents, or the 618, 22 cents. The next one up would be 1618 at 46 cents, which again coincide with price target 2 at 42 cents. So I know this is a long video. It's almost 25 minutes, but there's just so many things to walk through between the ABCD pattern leading into the shark pattern, leading into the 5-0 pattern. And once this video is up, I will put the detailed explanation into the description for you to follow along with the written stuff. Okay? Guys, this is not financial advice. I am not a financial advisor. This is for educational purposes or entertainment. Your entertainment only. So Please do your own due diligence and your own technical analysis. I hope this helps. If it does, consider subscribing and liking the video. I'll talk to you soon, guys.